Hi there, welcome to Kneppy Invest. In this video today, I'm going to talk about this massive contract that Medicus signed or announced to the market on the 26th of September 2023. The market absolutely loved it, and no doubt when you look at the specifics of this contract, share price rose about 12% on the day and has continued to rise on the 27th of September. I'm recording this video at 5 p.m. on the 27th, and the share price has risen another 0.6%. And the share price is now at an all-time high for this company, which sort of makes sense because this company is delivering on their promise. Now, I was a little bit conflicted about Medicus over the past few months because I am a shareholder of this company. Now, as a shareholder of this company, I look at the valuation the market is assigning to this company right now, and I just shake my head. A PE ratio of 137.97. Now, that is a backward-looking PE ratio or trailing PE ratio. That's according to market index. And if you did calculate the forward-looking PE ratio, more than likely it's going to be closer to 100 because of significant growth this company is expected in financial year 24. Markup of $8.4 billion on revenue just above $120 million and profit just above $60 million. And that just should show you or prove how the market has high expectations. And when I say high expectations, that's probably the wrong word. Extreme high expectations of this company in the future. And in my opinion, this huge contract the company announced on the 26th of September is the company delivering on that expectations, delivering on the promise that the market expects from this company. So I'm going to look at this huge contract the company did sign. Not only will I have a look at this huge contract, I'm also going to compare it to other contracts the company has signed in the past year. We'll also have a look at gander at the financial year 23 results. And of course, at the end of the video, we'll have a look at Medicus's daily chart. These are 6 contracts that Medicus released to the market in the past year, or just over 1 year. So what I want you to do is just compare these numbers to this massive contract the company announced on the 26th of September. So let's have a look at some of these numbers. So a 7-year, $15 million contract, 8-year, $12 million contract, 7-year, $25 million contract. And I remember that contract and thinking, well, that's pretty impressive. 7-year, $24 million contracts, 7-year, $20 million contract, 8-year, $12 million, 7-year, $15.5 million. So all these contracts are sort of in the same ballpark. The best contract, without doubt, was with the University of Washington, UW Medicine, 7-year for 25. And again, as I mentioned before, I still remember that and thinking, wow, what an impressive contract. And this company just keeps on delivering. And then on the 26th of September, they announced another contract. And this particular contract just blew all these other contracts out of the water. And here is that contract the company released or announced on the 26th of September. Medicus signs $140 million 10-year contract with Baylor, Scott, and White Health. I'm assuming that's in Baylor, which is a university, maybe it's even a town in Texas, and they just do things bigger in Texas, don't they? So $140 million over 10 years, so at least $14 million per year, which is actually quite significant for this company because of their margins. I'm going to talk about the margins when we look at the financial year 23 results in the next slide. So the only thing I looked at when it came to this announcement was the numbers, and it just blew me away. I think it blew the market away because even though this company might be considered overvalued, the share price still rose 12%. Now to the financial year 23 results, and I've just included the profit and loss statement, which was on this side, and the statement of cash flows, which was on this side. I'm going to ignore the statement of cash flows because even though it's really impressive, there's nothing we can draw, significantly we can draw from the statement of cash flows because I really want to concentrate on the margins, particularly the net margins. And the reason I want to concentrate on the net margins will become clear in a second. Now, impressive revenue growth from $93 million to $124.9 million. This company has almost zero cost of sales, so the gross profit is greater than 99%. And if you look at their expenses, not a lot of expenses there. In fact, the highest expenses by far is employment benefits, $24.1 million in financial year 23. And that grew a significant amount from financial year 22, up about $9 million. Now, even though employee benefits increased by a significant amount, profit still increased from $44 million to $60.6 million. So compare the revenue, say 127.3 million to the profit for the year 60.6. So the net margins for this company are nearly 50%. And I fully expect the net margins for this company to possibly exceed 50% in the next few years. And the reason I've just rounded up to 50% will become clear right now. So if we take this particular contract with this Baylor company, whatever it is, health company, $140 million over 10 years, so $14 million per year. That means with 50% net margins, might be higher, that's $7 million of profit per year just in this one contract. So if you apply some very conservative P ratio analysis to this company, say just a 50 P ratio to that $7 million, that's $350 million of valuation in this one contract. And just remember, the P ratio of this company is greater than 100. So possibly you could say $700 million of valuation just to this or for this one particular contract. And if you have a look at the share price rise on the 26th over 12%, that means the market has already signed a valuation or increased valuation of about $800 million, which is sort of the value of this contract, assigning a P ratio of greater than 100. So the market has already priced this particular contract in the valuation of Medicus. And now onto the chart for Medicus. Always finish with the chart. Always look at the charts. Without fail, look at the charts, and this is a beautiful looking chart. In fact, the share price of Medicus has been in an uptrend since July, August of last year. So 1 year ago, you could have bought Medicus in June of 2022 at $38. A nice little support level at that price. And the share price of this company has more than doubled in the past 15 months, from $38 to a current share price just above 80. And not only that, share price is at an all-time high. That's really important because when a share price is at an all-time high, and even though a lot of investors refuse to buy companies when they're at all-time highs, because for some reason that's a negative thing, but it's a positive thing, because when a share price is at an all-time high, there's no resistance, because no investor has bought in higher prices in the past. And investors these days want the share price of a company to immediately increase from when they bought. So right now, on the 27th of September, there is not one shareholder, or maybe one or two, who might have bought in slightly higher prices, because I don't think Medicus actually closed at the high of the day. But the vast majority of investors in this company are in profit, which means there's quite a bit less resistance moving forward for this company. Now, when it comes to the valuation, that's one slight concern I have. But this company has looked expensive for a long time. In fact, it has looked more expensive than this in the past. At one point in time, the P ratio of Medicus got as high as 200. So there's always been a premium for this company because the market expects big things from Medicus. And this company just keeps on delivering with massive contracts like this one, $140 million over 10 years. That's all I have for this look at Medicus and their absolutely huge contract, by far the biggest contract they've signed. Dwarfs other contracts they signed in the past year. Is this a sign of things to come in the next few years? Will they sign other contracts like this? If they do continue to sign contracts like this, possibly this company is undervalued. I can't believe I'm saying that right now. So as a shareholder of this company, I'm going to maintain my holding. I am not going to take profits because I just don't know. It looks expensive, but I could be completely wrong. And the chart looks absolutely great right now as well. And probably the most important thing is don't sell when the chart looks like that and when the company announces a contract like they signed or announced on the 26th of September. So that's all I've got for this particular contract from Medicus. If you have any thoughts, any questions, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.